Hello everybody, it's Modified Darvas Box, MDB, coming at you here with a video here on Saturday, November 2nd. And it's a very exciting day to be doing a video looking back at this past week. For new people who don't know who I am, I'm a regular guy who came up with a system based on this book. Read it, buy it. It's a really good one. Many people thought it was a cute story, but I saw a valid system in it. Basically, I look for bullish Darvas box patterns that look sort of like this, and I try to avoid or short, mostly avoid, bearish Darvas box patterns that look like this. I also add some fundamental stuff in there as well, but technically, these are the patterns that I'm interested in. All right, so let's get into it here. Super exciting week because the market's now going into what I call it's almost full bull, where all the major indexes are breaking out to the upside. Now, uh, the three of them, the Nasdaq, the S&P 500, and the Russell 2000, uh, are almost there. So, looking here at the S&P 500, S&P 500, yeah, that's a breakout right there. And sometimes this volume shows up here as big or small because it's an approximation. You can always go to SPY to see. Yeah, so volume wasn't huge, but irregardless, this index has broken out to the upside. It's broken its Darvas box. That's the weekly view. Here's the daily view. It actually did it last Monday, but then futzed around, up, down, and then finally conviction buying kicked in that, yeah, baby, this thing's going higher. The NASDAQ has already been there because it did it last week. Look at that right there. So this past week was just gravy on top of the breakout there. Did it last Friday, futzed around all week, and then boom with authority on this Friday. So yeah, the Nasdaq is leading, which it should be because it's full of tech stocks and all that, and it's got it should have the brightest future. Now here's the third index, the Russell 2000. This is why things are getting really exciting because the Russell 2000 represents stocks that might not be in the Nasdaq, and they might be smaller stocks that are not in the S&P 500. It's another slice of the market, and for risk taking. Look at that. It's had some tough weeks where literally I thought we were going to end up way down here, but no. Look at that. It's joining the party, going up. It hasn't broken out yet, but it looks like it wants to come to the party. It looks like it's outside the house, just looking for a place to park, and then it's going to come inside and join the party. So once that does, then we're going to be at full bull, which is full speed ahead on the long side. So probably call it 3/4 speed, but for all intents and purposes, it looks like it's going to happen. Some winning stocks here. Apple Computer, look at Apple. I was talking about it here in the beginning of September when it broke first, came higher from its Darvas box. And now look at it. Had a good earnings report. Dude, if you're long Apple, you should just be sitting and enjoying the ride. You shouldn't be sweating or stressing or doing anything. Plus, you collect that dividend. What could be, there's nothing better than owning a dividend-paying stock that's going up a lot. You get paid both ways. Here's another winner, AMD. This is my honey bunny uh, because it's my biggest position. I started talking about it right here around the pink arrow. Uh, and I'm really excited about it because of its fundamentals, what it's reporting, and what its future forecast is. In fact, that's what gets me excited about stocks. When I see their future earnings growth, future sales growth potential through the forecasts. When you see stocks that are going to be growing leaps and bounds in the future, you got to take them seriously, and you got to try and get in on them, and those should make your watch list. The ones that should not be on your watch list are stocks that are going nowhere fundamentally. Very poor earnings and sales, etc. Here's another winner, which is breaking out. PANW. See, it's broken out from its Darvas box, and it did it on Friday on a big move on big green volume. Overall for the week, yeah, I would have liked to have seen, a bigger green volume spike. But hey, this is one that's moving out of its box. And the last one that really grabbed my eye that I want to show you is Snap. Look at Snap. Okay, green volume. If the big boys want it, then I want it. And so should you. If the big boys don't want it, then you don't want it, and neither do I. Snap here. Look at this huge volume bar. It's green. The big boys wanted it. And it looks like some people got shaked and baked out of it, too. Probably got scared. But the big boys who know what's up bought all their shares, and now look, it's up. And this here is a special pattern which I use. It's what I call a U-turn, where it breaks downwards from its box, looks very scary, looks very bearish. I don't blame people for selling on the earnings. It's a scary time. You got to figure out what to do. But it absorbed it, and now it's making a U-turn. And I went long Snap because I see this happening. And now look at it. It's back on the comeback trail. And more importantly, it's above the long-term weekly moving average. So extremely positive. It's gone from bad to good. And those are the types of stocks you want to own. Okay, let's look at a few of the ones that are baking on my baking list, which when they're baking, they have not broken out of a Darvas box, knock on wood, yet, but they've got some really good potential to do so. Here's COUP. Look at COUP. Man, this thing is volatile as you can't believe. Look at this. Big green, big red, big green, big green, big red, big green. Big institutional investors are yelling at each other. They're screaming at each other. It's going down. You're wrong. No, it's going up. Well, it looks like the bulls have won. There's still value ahead here. COUP has recovered and had some big green volume right there, which is always good. Now it's moving up with the market. The biggest positive I see from this is it's back above the long-term weekly moving average. It's got earnings in the early December, so that's a wild card, but it's one to watch. CVNA, here's another one. It broke above its Darvas box earlier this week, but then sold off. I tried it in here a little bit, and then these 2 days just shook me out. The big reason why I sold out and didn't try to hold it is it's got earnings coming up November 6th. But it's in a box. It's looking potentially pretty good, but we'll see what happens with earnings. ROKU, another one in the box that's just been doing awesome. Got some big green volume, but again, it's got earnings coming up here. So that's the element of risk. If you've got cushion, you bought ROKU down anywhere in here, etc., then just sit through earnings. You may as well. If you just bought it yesterday, yeah, that might be a little tough to hold. Nobody would blame you if you sold out because, not sure what's going on. But here's another one, STAA. Big, reported earnings. Earnings were good. Big green volume spike. It's right here close to the top of the box. That should be on your watch list. It's a thin trading stock, but it's got a lot of potential. So would you put a full huge position in it? But maybe you'd buy some. So, get some exposure to it. But it looks very promising here. And the last one, which is in a box but looks but promising, is TDOC. And TDOC reported earnings, the green arrow, that's what the green arrow is. And earnings, went up, had a big green volume week. Now it's broken out. But here's what's interesting. It's still in a much larger Darvas box. When a stock is in a larger Darvas box, yeah, then you need to look, and you like it, then you need to find other ways and other points to get into it. And sometimes it forms mini boxes inside the larger box. In this case, I like the earnings. I like the potential here. And for Investors Business Daily fans, I used to be an IBD guy, a CanSlim guy. The only reason I created my box system was because I don't really see the patterns very well, the IBD patterns, but I do see boxes. Well, here's an IBD pattern called a cup and handle, and to me that looks like one. I am not an expert on these patterns, so, double check with other people, take it with a grain of salt. But if this plays out, like how these successful patterns have played out, then this might be at 85 and higher prices within a pretty short amount of time. So keep an eye on this one if you don't own it. It's got a lot of potential. And now, this week there was some really bad earnings barfs. And earnings, like I said, you should only own names going in if you got a big cushion, if you got a good idea of what they're going to earn, etc. What do the future quarters look like? CMG is just showing some slower growth. Whoops. CMG reported earnings here on this green arrow, had the poor reaction to it, and it's just been selling down now. Big red volume bar, and now it's broken downwards from its Darvas box. It's also broken the long-term moving average. It's on the wrong side of it. So to me, that's a sell. You shouldn't own it. You can watch it, shouldn't own it. ENPH, this one here, ugh, what a barf. And I'm sure a lot of people may have owned this. The problem with this one, as I see it, is just slowing growth. But what's interesting is stocks will sometimes give you tells, as to what's going on with them. The tell here in this one were these 3 big red weeks. See, big red volume. Rebounded some on green volume right there, but then came right back down and then just sort of drifted, went sideways. And that drift in relation to the long-term weekly moving average. It just couldn't get any traction above it. It didn't want to go higher. Why didn't it want to go higher? Well, apparently this earnings was the reason why. The big boys knew, and they weren't bidding it up. Sometimes when a stock isn't doing something is as much of a tell as when it's doing something. Etsy, another earnings disaster. This is another one where it had some potential with this big green volume, but you shouldn't have been owning it. You should have actually been out of it, just watching from the prior Darvas box, where it sold off here on big red volume. There was no reason to be owning Etsy and to hold it through the earnings. That's my honest opinion. And people who did, got their asses kicked. Look at this huge gap down. And also, the 3 days leading into this earnings report, sell, sell, sell. This was just screaming, this one's not going to be good. So unfortunately, if you had that one, I'm sorry about that. Last one on the barf list, pins. Now, what's funny, I know people who have told me how great pins is, all sorts of good stuff, but here's the problem. Way back here, and I'm talking about tells, way back here, sold down, went below the weekly moving average, and it did it on red volume, and ever since then, it stayed below it and was downtrending. That downtrend should have been enough to tell you, I don't think I want to own this during the earnings report. You can read other bullish stuff, but this is the action of the stock. It's telling you, it's really telling you, yeah, maybe you want to sit this one out. And look what happened. Big gap down. I unfortunately, I know some people who own this. I feel bad for them. I wasn't making any predictions on this one. It's something that just happened, but maybe the company will recover. I just don't know the future on it. All I'm saying is that this was potentially avoidable. So these are some of the bad things that happen. But you know what? Individually, bad things, yeah, have happened to stocks. But overall, the market looks really good. It's breaking out to the upside. Try and find the winners, and you should do well with this going forward. So I hope you enjoyed this. If you have any questions, let me know. Otherwise, have a great trading week. Bye-bye.